Welcome. I am Jonnita Stanton. We have Reginald Perryman, Kashka Williams. We are TSARE, and this is a There's Something About Real Estate podcast where we talk all things real estate.
Welcome.
Welcome.
I mean, we need 5 of them now? Okay.
Reg, what's that on your shirt, man? That's Tiger
This
Woods?
this the Tiger Bear. This dirt label.
Oh, okay. Yeah. Oh, from Gary?
Yeah.
Oh, okay, okay.
I'll be representing.
Oh, that's dope. Can I get one?
The coldest one he got though is the Allen Iverson one. When
I haven't seen
walking over Tyrone Lue.
For real?
That shit cold, boy.
I ain't seen it.
I brought that one for my brother-in-law for Christmas though. But yeah. Yep.
Okay. I mean, everything been good. What did we do? Have we even talked? We haven't talked about the fact that we all went to Orlando in the midst of winter and had like the most productive time ever.
Oh yeah.
Facts.
Went to a real estate conference, learned a lot, met some good people.
Man,
Met a bunch of Detroit people
For sure.
that live everywhere else.
yeah.
They in real estate. They in San Antonio, Florida,
North Carolina,
Arizona,
Virginia,
yep,
Atlanta,
Arkansas,
everywhere.
Kentucky.
Yeah. Okay.
I don't know about people from Detroit going to Kentucky though. You gotta have a burner phone messing with them. No, I'm just playing. But yeah, it was good. It was a lot of education there though. We learned a lot about stats and housing market and
The economy.
Yeah.
Do you remember? Was we all in the same breakout where or was that just? I don't know, but there was a breakout when they were talking about like over time since like what? Kashka.
I'm listening.
2000, like early 2000. I don't know if they started like 2000 or if they started like 2005 or 6. Like what the cost of real estate was.
Oh, yeah. That was in the-
how
that
it
was in
kept
the
up
State
with
of the
inflation and all of
Yeah.
that. Yep.
What they call that? The State of the Union?
State of the company or something like that.
Yeah,
I forgot what
yeah,
it was
yeah.
called. But anyway, they were saying like with inflation, the cost of owning a home, not just the pricing of homes, but the cost of owning a home is lower than inflation. So whatever the increase was, the cost of actually owning a home hasn't increased that much. So like when they say the cost of owning a home now because of where rates are, that's factoring in everything, utility costs, your monthly payment, and everything, taxes. It's really not that expensive. It's not where it would normally be at
Yeah.
when you look at that chart.
And so, I guess that leads us into, I mean, I think with everything that's going on in the economy currently, we need to know that potentially
Right.
making a purchase could be it could help on the monthly budget a little bit.
I feel like it's a fact right
Okay.
now. Like it's a matter of fact. The longer you wait, the more you're gonna pay.
I got a tenant in the property, and we selling the property. She been there 11 years. Section 8, $1,100 a month in Southfield, right? And she's like, man, I just love my house. I hate to move. And she was like, this lady don't have nowhere to go. She's not going to be able to stay in a similar house in Southfield. She has to downsize for that price because
And change her
everything is
area.
up. Yep, and change her area.
Facts.
So, but then at the same time, that buyer that would have brought 11 years ago was looking like shit, they extra happy now
Yes.
with the values that went up. Even though when the market, even though the market doesn't always go up, it's just like it's still some benefits versus renting.
The people that held during 2006, 7, 8, 9, 10, 11, 12,
Yep.
they are like laughing to the bank with their bags right now.
Yep. That's part of why I honestly believe that contributed, that and the interest rates, that contributed to a lot of the huge increases we've seen in values, because them people were like, oh, I got an extra 100,000. I'm selling this and I'm going right back into the market. So now you have a buyer that just sold and they got $100,000 competing with a buyer that's a first-time home buyer that's probably getting a down payment assistance or something like that. You got this other buyer that got an extra 100,000. Yeah, I'm gonna give you 15 over.
Over asking price, right?
Because
That's where all that came
I didn't
from.
earn the 100,000.
Right.
It was just there because I owned the asset. So I'll give you 15,000.
Well, look, I feel like you earned that shit. 'Cause
Yeah, you did
You
earn
went
it.
through some hard times. You was scared as hell.
Yeah.
Yeah, okay.
Hell yeah.
Maybe you were scared.
Yeah.
However,
You stressed yourself
I
out.
feel like I know individuals who, let's say like University, Sherwood Forest, I don't know the historical districts in Pontiac to compare it to, but you know, that held their property and they was okay with holding.
Yeah.
Like they was just basically like, we here. No, we not selling.
Or even the people that brought at the downside of the market.
Facts. Well,
So-
those people won.
Those people too.
Yeah.
The people who purchased.
But we talking about 6, 7, 8. You still was at the top of the market.
Yeah.
You was buying high.
Yeah.
You know what I mean?
I'm talking when I mention that, I'm talking about people who. So, think about this: the people who were current homeowners
Right.
that did not let their house go because the house next door they felt like had dipped so low in value.
Oh, yeah, I
so
see what you're
now
saying.
my house isn't worth it,
Right.
and so I'm gonna walk away from it.
But them were old home. So nobody that bought their home prior years was doing that. The people that was doing that was the new home. Like we had a
Yeah,
wave
the new-
then. Those was
right.
the people that was buying as a fad then, paying. Getting
Like I got
$10,000
in
back.
0 down.
Yeah, they wasn't spending
for
no money.
300,000.
So you're not
money.
vested in it, so it was easy for you to walk away. Those people you're talking about is like grandma and them basically. They wasn't letting
Right.
their shit go anyway.
No.
So here's the thing, right? whether you brought it a year before the crash or you brought it 20 years before the crash, the
Or 5.
fact is the people that was in the game of home ownership, they making out.
Exactly. So
big.
that's all I'm saying. Period.
Right.
If they held it,
Right.
and they didn't have the mindset of I'm walking away from it because my neighbor walked away,
Yep.
they are happy today.
Right.
So the point I think I'm saying is, if you bought a house today
Right.
and we had a downturn, but you held, because
Right.
that's what people do sometimes. They hold, and then you wait.
Right.
It's a good possibility that you still have a good investment because it's still land and dirt.
Yeah.
So what I'm saying is, if you bought in 6, 7, and 8 at the top of the market,
Right.
you're not selling for more. You just got back to even. You can refi at a lower interest rate, so you reduce the amount of money that you paying per month. But we're not much higher in value.
It depends on the area, because some areas are way past what they were in 05.
I would like to. I'm talking about
15%.
8. We're talking about 6, 7, 8. So right
Yeah, but
before
leading up
at
to
the
that,
height.
yeah.
You know what I'm saying? At the height.
My house started going down about 7 or 8.
Did it?
I brought it in 05.
Exactly.
And then I'm way past where I was in 05.
So it depends. Yeah, I guess
Yeah.
you're right. It depends
So
on where you bought from.
Right.
Because if you in Pontiac, so in some of the mortgages that I had, I mean, we got back there.
Right.
You know, if I would have held on, I would have barely kept it. And remember, I'm an investor though, so it's different.
Right.
But if you bought then and you held on now, if you refi,
Right.
then you cool because you know you're paying a lot less.
Right.
Now, you know what I'm saying? So.
Or the person that brought and didn't care what the value was, they just
they a
kept renting
homeowner.
it out.
Yeah.
They was collecting rent all this time.
Oh yeah.
And they was still cash flow positive. Now they got all this equity because of the market is up. They good.
So what does this mean for today?
What? So two things, right? So I want people to understand this. I'm not always a fan of everybody owning a home, but because I mean, technically we do need people renting. But when people give up the responsibility, because most people don't buy a home because they don't want the responsibility. When you give up that responsibility, you lose some of your power and control over your home ownership, where you stay, and all of that, because landlords are going to sell in a market like this. When everything gets up, now you forced back into a market that you can't afford. It's a whole different market than when you started
And that
renting 5
landlord
years ago.
going back into the market with liquid cash.
Right.
You're going back into the market with hopefully
Your
$2,000 or
security
$3,000.
deposit.
Yeah, that
Right.
you saved.
Yeah. So that's the difference.
So how? Okay, I've been trying not. So I don't get into like the gas prices. I've been here before. I remember 2005, and I was driving my Dodge Ram, and we was at 3 something per gallon.
Right.
But we back here again. I mean, I don't think I've ever in my lifetime seen gas at $4.50 a gallon. And they're saying we're gonna get what, up to $6?
Be honest, to me is I'm gonna be honest with y'all. I didn't even know what the gas prices was.
Thank you.
I just been going and filling up. It was a time in my life where I really paid attention to it. The last time I actually looked at the gas prices and said, damn, was right when we was on lockdown and gas went down to what, like $2?
Right, it was low.
And something,
It was
and I was
$1.98.
I was like, I should just fill up and drive everywhere, right?
Exactly.
So I'm just at like the past like 10 years of my life. I ain't been worried about miles on my car. I just go.
That is
fill
great
up.
that you guys have so much what do you call disposable income.
Nah.
Well, it's not that.
That's not it.
So this is what I'm saying. And in our line of work, it's not me. Unless you're gonna go electric, you don't. I can't change the gas price, so I gotta fill up and go anyway.
What you complaining about, right?
Yeah, so complaining not gonna change it, but there have been times. I mean, I used to $5 the hell out my car, and everybody that rode with me had to give me gas money. So I get it.
That's what they should do.
Look, I'm just saying.
That's a great point. Maybe we should get back to how much you got on the gas. You know what I mean? What you got on the Patreon.
If you don't have your car, you definitely
If you're a
gotta
buyer's
pay that.
agent, you better charge that gas fee.
I've always been a person that's gonna fill since I've had my driver's license, I'm gonna fill my gas tank up. So whatever the prices I'm 40 years old, whatever the gas prices have been over that time,
right,
I've paid them. But what I have been thinking about is, so I'm in customer service, I sell real estate.
Right.
I have people who I have to empathize with.
Yeah.
And the question I guess I'm asking is like, how is this actually impacting people that we live in Michigan? Everything that we do, we drive everywhere.
Right. I got a good answer.
So how is this actually impacting people in their budgets and what they can afford for a house? Like, are people kind of like, I'm not gonna buy a house because shoot, I can't afford the gas?
I don't think so.
You buy a
That's
cheaper
two ways,
house,
right?
I don't think
So
so.
you have to adjust your budget. So we're talking about what is it gonna cost you, an extra $10, $20 now to fill up your tank, depending on the size. So that's it. Let's say an extra
I got a
60.
23-gallon tank.
Extra, depending on how much you drive, an extra $60 to $80 a month for gas, right? Depending on how much you commute, right? If you're a buyer's agent only, probably an extra $200 a month, right? But that does have an impact on your ability to buy or go out and spend money elsewhere. But I mean, a lot of people got a lot of free money over the past couple of years, and we just paying it back.
Different perspective, right?
Right.
It stops them buyers now from wanting to travel around the world looking at houses for no reason. Now they're going to be more selective in the houses that they want to go see.
Possibly if they, if
that's
they're
from an
conscious,
industry perspective,
Yeah,
not
yeah.
an economic when it comes to house budget.
I don't think that is
and life
impacting
perspective.
those people at all. It's like nobody is saying gas prices is $4 or how much is gas? I don't even know how much that shit is right now.
It's
so whatever
for
it
something,
is.
whatever they
Right.
posted.
So however
It
much
ain't-
What's the
gas-
comedian that I be sending? I'm about to look it up while y'all talking.
But nobody is saying, I'm paying this. So is it, what is it? Is that 50 cents more or $1 more? How much more?
Probably like $1 more. So here's the thing, right? That person that's not thinking that way, they're like, I'm gonna buy a house anyway. But a lot of people, it's like,
$1.50 more.
yeah, it's gonna come back down. It always come back down. But what if it don't? Because when I started in real estate, gas was like 89 cents or something a gallon. I keep telling people that. It ain't going back to that,
No,
right?
Unless we
Okay,
start
Richie
making it here.
Fontaine on Instagram, the comedian guy. Look, that's what he on right now. He like, we over here going to war, and we haven't gotten these gas prices and these wings
chicken wings,
prices under
right.
control.
Yeah. So it's
But I guess I'm highlighting it because I think that we are we are the minority.
right. But I've been in that position too where everything mattered. Right.
So when gas prices was 89 cents, if it had went up to $2.50 in that time that it was 89
I would have
cents.
been ass out.
Yeah, you wouldn't have been
I'm
buying no
telling
house,
you,
but you wouldn't have been thinking about buying a house.
I was
Okay,
putting
that's
like
point.
$6 or
But I'm saying,
$7
no,
in the car.
You was never, if you was worried about gas, if your issue was gas, you're not a home buyer. You're a renter. That's what I'm saying.
Well, not necessarily. I think if your issue is gas, you just have to cut out some extra activities,
there it is.
Right?
It's
or
other things
if
that
maybe
cut
you
off.
drive for a living, maybe you have to charge more.
I'm not
and
cutting
something.
I'm not buying a house because gas went up.
Well, no, I'm saying like maybe you don't go out as much on the weekends.
Okay,
That type
cool.
of
But
thing.
it's not affecting.
But what about 15 of your
buying a house.
buyers?
They're not buying homes. If you're not buying a house because the gas went up, you probably weren't going to buy a house anyway.
So these interest rates.
Right. She just jumped right.
Because I'm not about to beat this damn horse.
Right.
Because all I'm saying is, when we're brokers.
Right.
He may as well be a broker. He ain't
Right.
one, but he may as well be.
Look.
But I'm saying we have to consider, so we have a $50,000 person and a $1 million person.
Right.
We have to have empathy for every individual in the market.
Right.
And all I'm asking is, like, realistically, not what my opinion is about the person and their mindset, but realistically, how does this impact our market?
Yeah, it is. It does impact a certain amount of people, and there is an expense creep, right? So as things start costing more, you don't notice it that much at first. You notice it when you go to fill up your tank, but you don't notice how it's impacting other things in your life. So you go to look up, and all of a sudden, we're not going to the movies as much because we're paying more in gas. We start cutting out things because over time it does add up. So I agree with you. I'm just saying I agree with Shaka that it's not going to make people say, "Oh, I'm not buying a house at all."
I hope not.
Yeah. Well, no,
not.
they're not going to not buy a house, but if they delay the process, then it's going to start kicking in. Like, I used to be able to save, I don't know, $500 a month. Now I only can save $400 a month because of gas. So now, if enough months go by and they actually pay attention to the numbers, they may say, okay, instead of me buying a $180,000 home, I'm gonna buy a $160,000.
Or like you said,
home.
save. Like, I think that's important. So I think that's what I was trying to get to. Like, what's the education? You know what I'm saying? So like me personally as an individual, I just went through and canceled. I was paying $300 a month in Terminex bills. Terminex. Like, just because I have like this probably I don't even know that I need Terminex.
What is that? That's like
the pest.
I was paying.
Termite. The termite.
Look, all I'm saying is, I know I'm not the only person who have subscribed to something
Right.
that they can go back to and be like, you know what? I need to, like, that's a strategy, right?
That's because you live in the country. So everybody don't live in the country and they're not worried about.
No, they're
Right.
probably not. That's probably
Terminex.
not their specific thing that they're paying for. So what I'm saying is, right now, we're dealing with high interest rates. We're dealing with higher. I'm sorry.
Increased interest rates.
Increased interest rates because they not high.
Right.
That was not right.
Right.
But the gas is high.
Yeah.
The food
And eventually heating
is
costs
high.
will increase as
the
well.
heating costs have already increased.
Inflation is going
Exactly.
on, right?
And so the educational part becomes how do we attack it? What do we do? And I think it's like what you said. So from you, I guess you took from your savings. Maybe Shaka don't need to do nothing. And for me, I'm like, let me go through my bank account and see, where can I cut back? And yeah, it sounds ridiculous. He's making jokes on it or whatever.
Right.
But yeah, I mean, why am I paying? I don't even know that I told Terminex, I'm like, I don't even know that I need you.
Luckily, they did research on this. So the research suggested that that it's still cheaper to buy a house
Yes.
Than a rent.
now than it has ever been. Right.
Right.
So
Cheaper to
100%.
own a house.
Cheaper to own a house.
Right.
The cost.
That's what I said about
Yeah.
Right.
Because some people look at buying a house at the price they paid for it.
Mm-hmm.
Some people look at what is it costing me to live per month, right? Because if my house is $300,000 and it's costing me $1,800 a month, and the value goes down to $250,000 and it costs me $1,800 a month, and I can afford $1,800 a month, I'm not going nowhere. The value only matters when you get ready to sell it, right? So, but most people are not paying $300 for their house. The bank is probably paying $290. You only paid your $10, so that's your true
So it's like,
investment.
what do you feel? Like, what do you actually feel? Like, what's tangible coming away from you each month?
Well, I have to disagree because that's where we get caught up in your feelings. It's all about the numbers.
I don't mean feel like emotional. I
Okay.
mean feel like, how does it feel when I'm paying my bills and I can't afford shit else? Like, that's what I'm talking about when I say feel. So, like, I completely 100% agree with you and Shaka to that point. And I'm just, because I think that, and I could be wrong, y'all go out there, do the numbers, put us in the comments what y'all paying the mortgage rates, but to rent a house today versus having a mortgage today, you probably $200-$300.
Oh, it's more than that, depending on where you at.
Depending on where you at.
Yeah.
You're going to be saving on that end of it.
Yeah.
On the purchasing.
You know, people be like, I can't afford to buy a house right now. And,
You
and then
already
you be like,
bought
you can't afford not to buy a house right now.
Right.
What you mean? You know what I mean?
Because you got to
Yes.
keep in mind, your landlord, whatever you're paying, is covering the mortgage anyway.
Yes.
You just don't have the responsibility. But some people can't manage money. The same reason most people have their escrows included in their
Yes.
payment, because they're not good at managing money. So if you can't put away $300 or that extra $200 that you would be saving, you might be better off renting.
Message, and I think that's a horrible idea to escrow. If you don't have to escrow your taxes and insurance.
Yeah, I
can
agree.
lose your damn
I
house
mean,
over
well, no, I can't say it's horrible. I think it depends on the individual.
So that's why I say it's horrible. Because, all right, I understand what you're saying.
Let's say your taxes and insurance. Your taxes are $7,000 a year. Your insurance is, I don't know, $2,000 a year.
All right.
You can put that money somewhere and earn some money on it, right? Mm-hmm. Versus just letting it sit in escrow with your mortgage company until the bill comes. I mean, that's the simplest way.
But
everybody is not going to save that. They're going to see that $7,000, be like, oh, I'll spend it and put it back. Oh, I'll pay my taxes when they come. Then next thing you know, they losing their house for 2 years of taxes.
Yes, that's my point. You get what I'm saying? Why would you do that? Why would you even put yourself in that situation to lose your house over $9,000?
Right.
When you don't have to.
But your mortgage protects you when it's escrowed in.
Yeah.
No, it doesn't, because your mortgage charges you. Now your mortgage then went up, and now you can't afford your mortgage, your monthly payment with your taxes and insurance. Now
It depends on the individual.
You got 3 years on taxes.
Yep.
You can get away with insurance on sometimes, right? But your mortgage, they
Gonna
may
hold
not
you
be
accountable.
giving. They only gonna give you a couple
6
months
months.
before they start getting ready to foreclose on you. So why would I even put myself in that situation?
Depends on the person.
Do not ever do that. I understand. So we gonna disagree.
I agree with you for probably me and you, but it depends on the person.
I'm talking about not. I don't think anybody should do it. All right, they're gonna be bad money managers either way, right? You talking about people that are bad money managers.
I know some
Who
people
gonna
that
let
pay
their
their
taxes build up over the course of 2 years? So let's say they don't even get to the point of the 3 year for our laws foreclosure point. And then now they have that big lump sum of money that they can dig themselves out of, plus their mortgage payments.
No, but they can make arrangements with
the mortgage
with the
company
taxes.
will step in and pay those because they don't want to put themselves. at
And when
risk
they
to
step in
protect
and
it.
pay those, though, they're going to
add it
increase
to-
your mortgage.
Yeah.
So and you couldn't pay the mortgage already. You was barely
Yeah.
affording the mortgage already, right?
Right.
So
But
now
that
they got
goes
ready to
back
take your
to-
house over $9,000.
Yeah, the reason you couldn't pay your mortgage because
Well,
gas
maybe you
went up.
Look, go file your taxes and take your
Gas
tax
and
money
chicken
and pay
wings went up.
your past
Jesus.
due.
Right.
You know what I mean?
No, I agree with you. Everybody's situation different. I know people that pay their mortgage on time with their taxes and insurance included. They never had a problem.
Yeah.
The minute they refinance, and then they was like, oh, we just want our payment lower. We going to pay our own taxes and insurance. They was in trouble within the next year.
It happens, right?
Yeah, so
but you can get out
everybody
of, you
is
can dig
different.
out of that hole, 'cause, right?
Yeah, they could dig out of
dig
it,
out of that
but
hole.
it's like they never had that trouble before.
We
though.
should break that down a little bit further too, right? So people understand. Like,
Yeah.
for example, if you have your mortgage, you said $1,800 on a two. How much was that?
Let's say like a $300,000
$300,000
right?
house.
It might be a little bit more,
Yeah,
depending if
yeah.
your taxes and insurance included.
No, I'm just talking about principal and
All right.
interest.
All
Principal
right.
and interest is about what? Under $300,000.
No, it ain't gonna be none.
No, it's gonna be like 20. It's gonna be like 20.
Like 1,800, something like that.
So your total payment on a $300,000 house is gonna be like $1,800 at this point.
Yeah, that's what I'm thinking, just off the top of my head. But let's just
All right,
just
so
to say
take
$1,800.
take $600 off, so $1,200 for your mortgage on a $300,000 house.
Yeah, whatever the number
$1,200.
is.
For your taxes and insurance?
No, principal and interest. We took $500 or $600 off
Oh.
for your taxes and insurance.
Well, I think you're gonna be on a $300,000 house. You're probably paying about $500-600 a month in taxes,
That's what I just said. So you take $500-600 off.
and then add your insurance on there.
Well, just give you an example. We just gonna run with
So
the number.
2,500.
Right,
25
okay.
minus. So you got 700.
Right.
So you got that 700 times 12 is 84.
Right.
Right. So you got $8,400.
Right.
Now, you can afford to make that $1,800 a month. Right.
Yep.
You get to month 3. Now, if you got an escrow, you at 25.
Right.
Shit, for some reason, whatever, you don't have the money coming in every month.
Yep.
Month 3, you're not paying your mortgage.
Yeah.
Because this is the other thing. When people don't pay some of it, if they can't pay it all, they're like, fuck it, I can't pay my mortgage. Right.
Right.
So now you 3 months behind on your mortgage. Now they about to foreclose on your house.
They
Right.
sending you letters,
No.
making demands.
They
Well,
about
he's
to
just
foreclose
saying
on
in
your
general.
house.
So they foreclosing on your house.
foreclosing on your
So you saying it'll be easier to catch up on 1,800 times 3 versus the 25.
Well, you ain't gonna have to catch up on 18 because your mortgage is being paid every month because you can afford the 18. You can't
just
afford that
the
additional 700.
right? But
So-
if your taxes behind and you only paying the 18, you could pay a little bit on them taxes.
Or you can make a payment
arrangement, right?
You get what I'm saying? And the
So
same
you got
thing on
more
insurance.
options when you don't escrow.
Facts.
Right, makes sense.
Yep. You know what I'm saying? You
Or
can get out of
just
your
take
debt.
the mindset of some people and just let the insurance lapse and pay the rest. I mean, it's not good advice. Look, I got this thing where I'll be like,
The
this
opinions
is
of this show
no.
is not-
It's
Right,
like this
right.
is y'all's bad advice. So meaning like it's horrible advice and I wouldn't do it. However,
But
it
it
might
happens.
save your ass.
Losing your house.
So here's the thing, though, or you can just rent.
Or you can just rent.
And pay more because now you're
pay
paying
more.
20 instead of paying 25. You're paying 27.50.
Yeah. And as soon as the rent go up, you just.
you
$300, $350
You're paying
more.
$3,300.
Yeah.
You're paying $3,000 or
Yeah.
better. You know
But that's what I'm
saying?
saying. That's the mindset. Some people say, "Why am I dealing with that? I don't want."
But they rather get evicted or just let their landlord know, like, man, you know what? I can't even do it no more.
But that's a real scenario though, right? So
They don't say I can't do it no more. They just stop paying.
They just stop paying and don't
Right.
answer the phone no more.
Yeah.
Right? But no, that's a real scenario. If you own if you're renting a $300,000 house instead
Right.
of paying the 25, you paying $3,000 to $3,300.
Right.
An additional $500 to $800.
Yeah.
You know what I'm saying?
So it's this thing. Like I heard, we were talking about interest. The first person I heard say it was Tijuana Jackson, but he got it from somebody else. But he was talking about interest, and he said those that know about it earn it. Those that don't know pay it. Right. And it's the same way with real estate. If you don't know about it, you're gonna be paying somebody, or you in a position where you start earning money from it. And that's just the way, whether it's interest rates to me, it's like your interest rate is a reflection of the amount of risk somebody put on you.
Yes.
So you got a higher interest rate is because they feel like you're a higher risk.
Yes.
Right? Lower interest rate, they like, okay, we'll give you money. We trust you to pay us back. But then part of that is what the market demands. Everybody a risk, so rates high.
Right.
You know what I'm saying? So that's just what it is. But
I just feel like when it comes to rates, though, until we get, over 5, I need y'all to stop talking about the interest rates. Because they
Yeah.
not.
But I just was talking to Eric though. It's right at 5.
So we were just having this conversation. I'm not gonna we not calling names. I don't
Alright.
care how much y'all pressure me. But I was telling Shaka that when it comes to like we were having a conversation with one of our mortgage professionals, and they were saying that Mr. rate is not higher than the regular rate, and that's not a fact. The Mr. rate typically is higher than the regular rate. And so when I was talking to him, I know Mr. is probably right at 5, but not your regular rates. You still under
So
me
I
like
had
at
a-
that
I had a-
4.75.
I had somebody calling me from Atlanta asking me about rates. He got good credit.
right.
His shit was at 4.85%. No, it was at 5. they paying down their rates down there. So you remember we're not
Buy
really
the buy downs?
Yeah, we're not really doing that here, but in Georgia they are. So they had like, all right, you don't have to pay nothing. You get this 5%. You pay this amount, you're gonna be at 4.875. You pay this amount, you're gonna be at 4.75. You pay this amount, you're gonna be at 4.5.
And they brought it down?
No, I had to go.
I did amortization.
Yeah, I did amortization.
Yeah.
I'm like, bro,
Most people
just
don't
pay it,
even.
yeah.
Most people don't even look at the numbers. They don't know.
That's
how
part
to,
of your education for your person, though.
Yeah,
What he did.
But the thing is, here's the thing, right? So I'm learning that some people, I think some people just like to be sold. They like how something sounds sophisticated or something. But if you break the numbers down, it seems boring. Like, okay, well, if you do this and that. But as soon as somebody comes to them with something flashy, they going to take it like, yeah, you buy your rate down. You going to say this over 30 years. And you like, I ain't going to be there but for 3 years.
Hold
You know
on,
what I'm
and
saying?
then here go the thing. You was for every quarter point that was,
Right.
you was saving 10,000 over 30 years.
Yes.
Right.
So I'm like, bro,
So what's it like?
over 30
What
years?
it's like $10 a month? They
Yeah,
saving?
that was
Yeah,
breaking
but
it
they
down,
paid-
like, get
they
out
But
of
that's
here.
what I'm saying.
like-
That's why I don't completely agree with what you're saying, because I feel like people that are buying, a lot of people really don't understand.
Right.
They think that a 3% interest rate is so much drastically different than a 4 or a 5%. But when you put all those numbers into the mortgage calculator and then you show them the difference, like monthly, like how much it increases, like you said, it may be $10 or $30
3 and a 5
or
is
whatever.
different, like, shit on that price. And then it's about how
Whether
much
it's
you
3 or
spending.
5, if you put it in a calculator and you show them what it is, it's still it's not enough to make people walk away from their house.
But he was buying a $400 some $1,000 house, so the difference between a 3 and a 5 would be huge.
Yeah, it would be different in that price point.
In the quarter points that we was talking about, it wasn't that much of a difference. We was talking about $10, $20 per
Right.
quarter.
Right.
But in 2%, shit, yeah, you talking about?
No, I'm talking about maybe a 1 point dip. So you may go from 3.8 to 4.8. Or from 4.8 to 5, because you said I haven't seen the 5s yet.
Yeah, he
just
was in
yet.
the 5. He was conventional with a decent credit score, good.
He may have needed
debt
to
to
call
income?
if he had good debt to income, good credit score. He probably needs to go to a credit union or a bank and compare them rates.
He did. So he was. It was a new build, and yeah, he had 3 different lenders, and this was the best lender. Yeah.
Yep, shop around.
Yeah.
Yeah.
That always shop
And that's the
around.
other thing. People think that because I'm shopping around for a mortgage, my score is going to just drop drastically. That's not the case.
Mm-hmm.
Like, let them lenders pull that. Not 12,
Talking
but
about
maybe 3.
We talking about 3. Well, you got to
2
remember
to
how
3
that
people.
works, and we had to get our credit
Yeah, we
repair
got-
service or our
No.
credit service.
Our credit specialist. No, we're going to get our credit specialist, somebody to really understand credit.
To
from a
understand, but I
mortgage.
think it's something like 3 points. Don't quote me on that, but it's something like 3 points, and then you can pull so many in a certain amount of time
Yeah.
Yep.
where it doesn't affect you.
Because they know you shopping for
Yep.
rates. You're not shopping and you keep getting denied.
Yes.
Like with a car, you got denied and then you went over to driving a Kia and then you got denied there or something like
Yeah.
that. So,
and then
yeah.
it's also a difference. Like, you cannot go, okay, I'm ready to buy a house plus my couch, and then I need a little bit of jewelry,
Right.
and then I need to open up Macy's.
I'm glad you brought up jewelry when we talking about finances, right? So this my very first year in real estate, and remember they didn't. It was no trade, so you kind of didn't find out your closing costs until last minute,
You
right?
sitting at the table.
So-
What's my numbers?
I called. My buyer called me the day before closing. So her boyfriend was helping her buy the house, but he was, it was all in her name. So she called me the day before closing. She like, me and my boyfriend broke up. I don't have no way to the closing because he had the car. She was like, can you pick me up for the closing? So I'm like, yeah, ain't no problem. I'm going to get this money, right? We done came this far together. So I go to pick her up, and she said, yeah, Mike called me. Mike Stickney was his name. She said he told me how much I needed. I'm about $500 short. And I'm sitting there like, you only buying like a $40,000 house. Don't look at me.
Now you better ask your lender to credit that appraisal.
Facts.
Well, the thing is, she was like, we need to make a few stops because my aunt gonna give me some money. So whoever she talked to, between the two people that was gonna make up this $500, when they got there, it was a different story. So we went by and, Sugar only got $50. Or, Sugar only got $25. And your brother came by and he ain't bring the money back. Just all these stories. So she only got $150, right? So I'm like, damn, we still short. So she calling people and stuff. So she's sitting there. We pull over and I look. And I was like, I know exactly where we can go get some money at. She was like, where? I said, we going to Zeman's, yo. Because, man, she had on her jewelry, her earrings, and her watch. I was like, we going to Zeman's. And I was like, I know you can get about $300 from Zeman's. She was like, how you know? I was like, I've done this before. Right? I got a couple customers like you right there on Gratiot. Thank you, Zeman's. They helped me close a lot of deals.
That's a pawn shop?
Yeah.
Jewelry
you really not from Detroit.
No.
So, yeah.
That sounds like a jewelry store.
It is.
Yeah, so...
I mean, it's a pawn shop, jewelry and loan.
Yeah, it's pawn shop. That's all it is.
Yeah.
So, yeah, but basically when we talking about finances and budgeting and everything, she had her money on her neck. She just didn't know that. So
And Reggie looked over like, bling.
Yeah, I was like, I'm not about to be driving you all around the east side. We Ross all the way back over to Van Dyke.
So I need to break this down for people listening. TRID, that's, our laws that, well, it's not ours, but mortgage laws that state that the buyer have to have disclosures to be able to review them for at least 3 days or we not closing. That gives you an opportunity to know how much you need to bring or at least a roundabout because it still could change. But
yeah, they got a grace amount between a percentage. So
you wouldn't be sitting stuck needing $500 and not knowing it, basically.
No, what about the day of closing, people finding out they need $7,500 more than what they thought? That type of thing.
Deal.
People was finding out the day of or on their way to closing, hey, you need $23,462.
Look, this is where you see Reggie's 10 years over mine, 20 versus 30.
Yeah. It happened.
Like
they ain't having no jury for that one.
No.
Exactly.
Right.
Look, that's where it
Right.
So while we telling stories, we're gonna just go off of one more. My mom, they used to. So you remember back in the old office days, you just had like the people who wasn't necessarily associated with the deal, but they was your closers.
Yeah.
Dog. My mom used to come into some of these rooms.
Right.
People be like, I ain't closing today. We not closing. It's not happening.
Right.
They be like, we need Bobby. Get Bobby in here.
Right.
Bobby come in his room. She walk out like, oh, we closing. It's definitely closing. I don't care what we need. It's getting done today. Sign them papers. But
like here's the thing. I'm glad you said that too, because I tell people if you can't prevent problems or if you can't solve problems, you shouldn't be in real estate.
absolutely.
That's who you are.
Yeah.
You what's the old girl? The
Problem solver.
No, the girl that worked for the president. She was black. The white president.
They all was
Carrie Hilson. Carrie Hilson. I mean, not Carrie Hilson, but
That's a
Carrie.
singer. She
Oh, you talking about a movie?
No, a TV show.
I'm wrong.
Yeah, TV show.
Yeah, Carrie Washington.
Oh, Scandal.
Scandal. Oh man,
Olivia
he
Pope.
like,
yeah.
Hey,
Olivia Pope,
he like the black girl who worked for the white president. I'm like,
That was doing more than what she was definitely working
The real
for.
one.
Yeah.
The real Olivia Pope. Yeah, that was her name. Problem solver. That's what you are in there. Like, and then if you ever had, so I never ran into those situations. So I wanted. So people say that you got control issues.
Right.
So the reason I wanted to learn every facet of the business is so that I can understand and know what the fuck is going on, so that we don't run into that situation.
Right.
Because that's on the lender. Right? That is on the lender.
Not all the
But
time.
I feel like you don't have
100% on the
look, I'm
lender.
telling you, I pointed it out. It's the 20-year versus the 30-year. Like, it was so much stuff happening in, like, the late 90s that you just
that's
didn't
why we
see.
have all these laws now.
It's still the same thing. We didn't have TRID back in 2005.
No, we didn't have that. However, you wasn't. I'm sorry, I've never seen somebody not have like $7,500. That's a big discrepancy.
Yeah, that's on the lender. That's why I said that's on the lender.
Yeah, it's on the lender.
If you don't know, bruh, good faith estimate.
Right.
So although it's new maybe the law is saying it's new.
But they
No,
always had
always
the
had a
law
good faith
isn't saying
estimate.
it's new. The law is saying it has to be disclosed.
Within for 72 hours.
Yeah.
Got it. That's my point. So
Right.
although that law is new, that is newer.
Yeah, it's a
Right.
newer.
If you were good at doing your job, I'm always
doing
want
that
my
anyway.
people to know. Yeah, I want
Yeah.
you to know. Hey, make sure when this in 30 days you have this amount
You
of
know
money
what
ready
it was?
for you.
Some lenders, because they see in your bank
Points.
statements.
Them lenders back
and
when
they-
he's talking about they charging points on the front, points on the back.
I
I'm
charge
telling you,
points on the front
look,
and on the back.
But
I still was
I'm
gonna
not,
let them know how much money you needed to come, or
that's
I'm not
great.
gonna finish my
No,
deal.
they what they was doing was a chess move. They'll say, okay, this person got an extra 30,000 in the bank. I'm gonna throw in an extra 2,500 in fees. But I'm gonna wait till the day of because it's less
That's what I
likely
was
they're
getting
gonna
ready to
back
say.
out of the
That's
deal.
why they got the
So
trade,
some
right?
of them, some of them lenders was just
Right.
So they can back
scammers.
out. So they can be like, hell no. But I'm saying, those are still bad lenders.
Yeah.
That's the point that I'm making. So y'all
Yeah,
saying,
you right.
y'all agreeing with what I'm saying, right?
Yeah.
Those
Yeah.
are bad lenders. If you're doing good business,
Right.
I'm not going to hit anybody with an unexpected $2,500
Right.
bill. Hell no to a $7,500 bill. If I see a $7,500 bill, I'm going to kill the deal.
True.
You know what I'm
Exactly.
saying?
That's
So,
what I was about to
yeah.
get to.
Yeah.
Like when you have your agent, so that's what I mean. So we going back in time.
And I
real
did
estate,
charge
but
on the front and the back. That
that's-
still was
Right.
fair.
That's what
You know
I
what
grew
I'm
up
saying?
in. Like a person, so I used to see my mother running, like talking to the lenders, looking at the good faith estimates, looking at the fees, basically being like, nope, we're not doing that. You can take that off. That ain't gonna fly. And did you really think that my buyer was about to come
Right.
and pay this on closing day? You don't lost your damn mind.
Right.
Point. That's why I wanted to be the lender. So I don't have to worry about the lender doing that retarded shit.
Right.
You know what I'm saying?
So good, we're away from that.
Yep. All right. So we was talking about inflation. They had it was something in Atlanta. I don't know if it was proposed that they was gonna get like single mothers like extra $600 a month or $800.
Yeah, Reggie didn't send us this article, so I was just gonna wait till you brought it up.
I seen it. I seen it circulating out there, but I don't know how true it is if it was proposed. But I just thought about think about the last year when everybody was getting all this extra assistance and how that impacted the market for everything
Yes.
from housing to supplies to everything, because everybody had extra money to buy stuff. So it shot everything up. I think stocks were overinflated. The housing market was already inflated. So can you imagine what the rental and the housing market would be like if you gave people just extra money because they were single parents or whatever the case may be?
The government throwing money all over the place.
But it caused everything to increase. 'Cause
Exactly.
now you
So-
competing with people that's working for their money. Now you getting an extra $7,200 a year or $8,000 a year. You know how much an extra $600 could do for you in your housing budget
See,
for the average person?
y'all saying it's extra, right?
Right.
And but that wasn't what it was for, because it wasn't necessarily extra. It was
Right.
to compensate for you not being able to work. You got to remember when the pandemic
Right.
happened, people weren't working, so
Right.
they wasn't getting extra nothing. They was just getting by. You know what I'm saying? It was
Okay,
like,
hold on. I got a
Well, not
question.
all people.
If they was buying, hold on.
Not
Right.
everybody.
If they was buying boats, crab legs, and furs,
you talking?
was it extra?
You're not talking about people that was buying houses. We talking
Yeah,
about
but
the people that buying
but
houses.
it still
Were they not
impact
buying
housing because
no, not them people you talking about.
well, it still impact housing because some of these people will go out into the rental market, and I'm not talking about the people that just wasn't
buyers.
working, right? There's people in general, and then you had other programs that came out in different cities and different areas where even if they went back to work, they were still pouring money back into it. So it's like, at what point, where's the balance of helping people versus giving people a crutch that's going to
Talk about two different
One
things.
second before
Right.
you, because I just want to ask another question with it. And then what is it doing to the economy when you throwing
Yeah.
all the money?
So y'all talking
Add
about
it.
two different things. So Reggie's talking about the additional money that was coming for like child tax credit and things like that. That's
yeah.
not PPP money.
Well, I'm just saying any additional
Okay.
money.
Well, no,
Let's-
because he said
Right.
he said a number, so he
Right.
wasn't talking about PPP. Talking
Well,
about
when we was writing up
$600.
this show, he said PPP.
But I'm just saying,
Well, no,
I'm giving
that
this
wasn't just
scenario.
the
He used
PPP.
It was all of
he used
it. Yeah, it was all of
$600
it.
as he used $600 as a number.
Yeah, because that was
a real
that
thing.
was something that was floating
Yeah, that
out
was
there
a
that
real
said
number.
we're
That
going to
was-
get this group of people
Yeah.
this amount
So
of
let's
money
let
per
Reggie
month.
clarify so we can answer.
No. Well, I'm gonna clarify for him. So it's two different amounts of money. One was the child tax credit where they was trying to make you whole because they know that people were struggling, and one is PPP. Them different monies though.
Right.
So if you're talking about the people that went and did whatever they did to get PPP loans, them are not the same individuals that you're talking about getting the assistance from the government for not working.
But it all impacts the market, period. Because you start looking at all these programs that came out around the same time, and it was like, we got to keep the economy going. But I think it was overstimulated is what I'm saying, because now you have people with all this surplus of money and they're spending it in ways they wouldn't normally spend money. So it drives the cost of everything up. So that's what I'm saying.
Use the program that you're saying is circulating for Atlanta right now.
Right. Well, that's what I heard. I got to read. Yeah. So if that's the case, the point I was making, if that was to happen, or if it is happening, how do you think it would impact housing in that area? Because now you got somebody would normally pay $1,000 in rent. Now they can pay $1,600 in rent. They're competing with people that would normally pay $1,600. So now that can drive the values of rent up or cost of rent.
$600 a month?
Additional, yeah.
Shit, I don't even think that's real.
All right, we're gonna look it up.
I want to hear about it. I would like to hear about it.
We're gonna look it up.
$600 a month.
I'm just saying hypothetically, if it's real, because the reason I brought it up is because the government had did other programs and gave people money for other reasons. So the impact that PPP and EIDL, whatever, all the programs, it's like you looked at even the companies that didn't need the money and still went and got it. What did they do? You know what I'm saying? It's like, it was so much of a surplus of money. I just think personally it impacted everything from housing. The cost of cars is up. My used car is worth more now than what it was 2 years ago.
Because you get a shortage, right? But for a different reason, not for those reasons.
It's a shortage, plus I think it's an influx of the money, the capital that got put out there.
See, the money is different. Y'all comparing the money the same. Bruh,
the money are talking about. I'm saying you looking at where the money came from. I'm talking about the money itself is going back into the market, regardless
and it's not,
of who got it and why they got it.
So listen, the people that got the child tax credits, right, or the advanced child tax credits and all that stuff,
right?
You're talking about maybe $5,000 if you got 2 or 3 kids,
right?
PPP loan, we're talking about tens of thousands of dollars.
But
so the money is different in how it affects what you're talking about. So if you're a single mother that had 3 kids and you got an additional $5,000, that's not about to help you go buy no house. But if you had a PPP loan,
I'm not talking about buying a house. So here's what I'm talking about.
Rent. That ain't about to help you do nothing.
I'm not talking about them separate. I'm talking about collectively all this money coming into the market at once. Mm-hmm. Everybody's consuming everything. What else can happen? Everything has to go up. Because for one, you had a shortage, and then you had everybody with a surplus of money, whether they got $5,000 or they got $50,000.
Well, that's two
They're
different.
Still looking to spend the money, and it's still coming back out into the market and driving costs up. So I'm just saying that where we at now, because that happened, we may not go back down to whatever the prices were a year or two ago. It's probably not going to happen. And people are out here thinking that they can still rent a 3-bedroom house for $750 a month in the city.
Well, that's not going to happen because of inflation. But inflation didn't have I think that money. It's two different things, though.
I think that money kind of accelerated things. The cost of everything is what I'm saying. Because if we would have been on a regular path, $750 would have went to $775, then $800. Now somebody be like, "Hey, I'm gonna rent my house for $850." You be like, "Cool, I got that." You see what I'm saying?
The reasons that happened. So that's what I'm saying. You gave a great example, right? So if PPP and EIDL didn't exist, then these things wouldn't have been happening, even with the advanced tax credits for the child.
Right.
Your children. You get what I'm saying?
Right.
We wouldn't be in this situation. People would now. along with, so what actually caused that was the people you was talking about that purchased their homes in between 2008 and 2017 or 18,
Right.
that had an influx of money now because the values of their homes went up. That's
Right.
what caused that. Not the money from the advanced tax credits.
I'm not talking about just the housing, the purchases. I'm talking about the rental side as well.
Me too. Both of them. So
Right.
$5,000, you're not about to go change your lifestyle over $5,000.
Depends on what,
You
what your
can't.
income.
You can't
If
afford it.
If you only making 20,000, 30,000 a year, 5,000 is a lot.
And you on Section 8. You ain't going out paying $950, $1,000 on your own on rent. You're a Section 8 individual. So now that's the people that's buying the crab legs.
But no, what you missing my point. If you get enough people all getting money, extra money, period. So maybe they don't go out and buy a house, but maybe they go out and maybe they start coming to you for your services with that $5,000. You got an extra $5,000 for a customer you didn't have. So now you got 20 new customers all giving you $3,000, $5,000. Now you can afford something different, right? So what I'm saying is the money circulated in the economy, and whatever inflation we was gonna have got accelerated. That's all I'm saying.
I hear you.
Regardless of what programs were out there, that money just all hit at once.
Gotcha.
What do you call it? The pandemic?
Right.
Right.
Pandemic.
It
I think
was
he
like
hit the nail right on the
everybody came
head.
up.
Yeah.
Right. And I just feel like I hear everything
And
y'all
I don't
saying.
think it was all because of like PPP loans or test stimulus. I think people, for like, they needed to be at home. I think people were just spending money. I think some people had money that they already had and they were spending it because everybody else was spending it too.
No.
Like we do that as a people. Like during the when we were in the midst of the recession, I'm gonna walk away from my house because my neighbor walked away from his house.
True.
I'm gonna work from home because my neighbor is working from home.
Right.
I'm gonna stop going to work and collect this unemployment because 10 other people at the plant did it. Like we follow suit.
However, if you, I hear everything y'all saying, right? All right. If you don't have EIDL and PPP,
Right.
and you don't have the influx of money, remember, this is the people that are overpaying is not necessarily from the EIDL and the PPP either, right? These people that are going above asking price. Where'd their money come from? Mainly,
Probably money they already had, but
no.
I
They
have no
didn't have the
house
money.
or the house they sold.
I don't-
The house that they said
But
that they
you
had
missing-
that was when they bought it, especially in Detroit. I mean, I got several of these houses where I bought them for $3,000,
Right.
and now they worth $100,000 or better, right. That's where the money came from.
But let me give an example without mentioning no names, right? I know several people that are investors. They do have their companies and everything. They applied for money and they got it. They got $20,000, $40,000. They went out and bought other properties, right? And they paid their contractors. They did some upgrades that they wouldn't have normally done on some of their flips, right?
For sure.
What I'm saying is, without that money, that would have been one less house brought or one less upgrade. Then their contractors went out, oh, I got an extra $20,000 job. I'm about to go buy this. The person they paid money to was like, oh, I got an extra whatever. All that money stimulated growth and it circulated to where all the tides rose all together is what I'm saying. So that caused rent to go up. Property values were already going up, right? But I'm saying it impacted everything because we're talking about inflation, interest rates, and everything. People that...
And there has to be scarcity mixed in there too.
Yeah, and people had that temporary boost of surplus. Now we're at this level, but we're not going back. And that income was temporary. So people are going to be stuck. So it's like a balance in that. We throw in money to help people, but now you're throwing too much money and people had a surplus and they spent it as such. Everything increased. That's why people complaining about
So in
gas right now.
essence, we're disagreeing with where the money came from. Because I'm saying that
we
the
know
money
it all came from.
I know.
But I'm just saying.
I'm saying if the money came, so you feel like the money came from the government. I feel like the money came from the increase in value of the property that people had.
I agree with that. I'm just saying, I think we disagree on the impact of the money collectively that came. This was like the perfect storm. We never had where people, half the houses had 40% or more equity. Mm-hmm. At the same time, you had the government giving this money to businesses. At the same time, you had the government saying, here, we going to help you out with this boost and whatever, tax credits, whatever it is, all at once. And you still had all of this demand before people even got that money.
And I feel like
and then when they got the money, they was like, oh, yeah, I'm definitely willing to buy this now, whether it was a house or something off of Amazon. And then when the prices start going up, people didn't budge, is what I'm saying. They kept buying.
Could you take the PPP money? Yeah, I guess you could. Take the PPP money and use that as a down payment?
Not technically, but if they had it for long enough, they could have.
Okay.
If they had it for more than 60 days, they could have.
Right. Maybe sourcing season. I mean, only if it's season, basically.
I want to throw something in here. I mean, and I'm not speaking for the whole U.S., but not one person that I closed that paid more than asking price had money from any of those sources.
Exactly.
Where'd they have it from?
Their 401k, their personal savings, or an inheritance.
Which 401ks did increase as well, because that was part of the stock, right?
That's
but a lot
facts.
more people look at what the stock market did when people was sitting at home, didn't have to go to work, didn't have to spend money on their daily commutes and all that. People was investing in the stock market that never invested before.
So what do y'all think the percentage? Okay, so so you talk about a section of people. Right, that still had their job and was able to work remotely. Right. What about the people that didn't have a job, that weren't able to buy houses because their job wasn't getting?
But see,
a lot of those people.
You limited it to just buying houses. I'm talking about the person that got laid off temporarily. They was getting more money from the government than they was from their job, and they was like, I'm not going back to work as long as I can. I'm gonna delay this process. And they sitting at home with no work expenses. They don't have to buy clothes. They don't have to buy lunch. They can DoorDash when they want, but they got the same income, if not more. Then they like, oh, I'm gonna buy stocks now. But I'm gonna try to flip this money. But I'm not talking about houses.
That's what we were talking about. We were talking about the impact of the money that the government was putting out there as it relates to buying houses.
Because it all impacts everything. No. So in other words, everybody that was getting surplus of money that they didn't have before was spending it. Gotcha. Once that money get into the hands of the business owners who pay employees, who had to now pay their employees a little bit more to come back, now these employees is like, oh, I was making $25 an hour, now I'm making $30. Maybe I'll go buy a house now. You see what I'm saying? Or maybe I don't want to go stay in this area I didn't really like for $1,100 a month. I can pay $1,500 a month. That's all. I'm not saying about where the money came from or this. I'm just saying collectively, when you had the housing boom, you had people with equity, you had the PPP and all of those assistance programs. All this money just hit at once. Everything had to go up in value, or pricing and inflation and everything.
And I'm just saying, I hear you, but I feel like it was going to happen either way. And the reason it was going to happen either way is because the housing market was increasing.
Right. I'm not saying I agree with you on that. I'm just saying that it was going to happen. This just accelerated everything and made it move.
Magnified.
Yeah, it made everything move quicker, right? All right. So we're gonna wrap this up. Jaja left the building. She had an important phone call, I guess, or whatever, duty calling or something. So there we go. It's a wrap.